Hola chicas y chicos! Greeting fellow crypto explorers. Today we embark on a journey through crypto taxation in the vibrant land of Spain. From the sun-kissed shores of Barcelona to the bustling streets of Madrid, every crypto transaction leaves its mark in the realm of taxation. Whether you are an investor, a miner or a casual holder, understanding your crypto tax obligation is crucial. So let's dive in. Basics about crypto taxes in Spain. The Agencia Tributaria views cryptos as capital assets, and there are various taxes that come into play. But let's start easy by exploring the different taxes that may apply to your crypto activities. Depending on the transaction and activity, crypto in Spain may be subject to 4 different taxes, including income tax, wealth tax, inheritance tax, and donation tax. Let's look at the tax rates on income. The lowest income tax rate is 90% and applies to an income up to 12,450, and the highest tax rate is 45% for income above 300,000. Receiving crypto as a salary and mining rewards, for example, are subject to the general income tax rate. Mining rewards can be subject to savings income as well as upon disposal. And now we are coming to the second type. Gains from selling, swapping or spending crypto are considered saving income or capital gains and are taxed between 19 and 28% in a progressive manner. Also, some DeFi activities are subject to capital gains, but more on that later in the video. If we look at the tax rate for savings income, we see that the lowest tax rate is 19% for an income up to 6,000 euro, and the highest tax rate on saving income is 28% for income above 300,000 euros. Next on our journey is the wealth tax, a burden on the net value of assets owned by individuals. This tax applied to crypto holdings over a certain threshold, with rates varying between regions. In Catalonia, for example, the wealth tax ranges from 0.21% to 3.48%. And in Valencia, we have, for example, a tax rate on wealth tax of 0.25% up to 3.5%. Different autonomous communities in Spain have their own wealth tax rates, ranging from 0.2% up to 3.75%, and starting to apply at around 700,000 euros. It's essential to be aware of the threshold and rates applicable in your region. And lastly, we have the inheritance and gift tax, which applies when gifting crypto assets or inheriting them. The taxable rate ranges between 7% and 36.5% depending on the amount received and the region you are living in. Understanding these tax categories lays the foundation for navigating the difficult terrain of crypto taxation in Spain. But which crypto activities are actually tax-free? There are several crypto transactions that are tax-free in Spain, offering a breath of relief for investors. So let's explore these exempt activities. The tax-free activities are buying crypto, hodling crypto, and wallet transfers. Firstly, buying crypto is tax-free. Whether you are acquiring Bitcoin, Ethereum or any other digital asset, there's no tax obligation at the time of purchase if you purchase with a fiat currency. Additionally, holding crypto for investment purposes is generally tax-free unless subject to wealth tax. As long as you are not actively trading or disposing of your holdings, you won't incur any tax liability. Transferring crypto between your own wallets is another tax-free activity, whether you are moving assets for security or convenience. There's no tax implications for internal transfers. Understanding these tax-free activities provides valuable insights into optimizing your crypto investment strategy. Now that we've explored the basics and exemptions, let's dive deeper into the topic with DeFi activities. In the realm of decentralized finance, innovative activities like staking, lending and liquidity mining offer lucrative opportunities for crypto enthusiasts. However, navigating the tax implication of these activities requires careful consideration. In Spain, DeFi activities are subject to taxation, just like traditional crypto transactions. Let's explore the tax implications for some common DeFi activities. Firstly, we have staking, a process where users lock up their crypto assets to support their network and earn rewards. While staking rewards are tempting, they are also taxable as investment income, which means you will have to pay a tax rate between 19 and 28% depending on the amount you have earned. When you receive staking rewards, the fair market value of the rewards in euros at the day they were received must be reported in your income tax return. Next, let's talk about lending, where users lend their crypto assets to earn interest. Similar to staking, the interest earnings from lending activities are considered investment income and are subject to taxation ranging from 19 to 28% depending on the amount you have earned. And, like staking, it also depends on the region you are living in. The interest you received should be reported in your income tax return at its fair market value in euros. And lastly, we have liquidity mining, a process where users provide liquidity to decentralized exchanges or liquidity pools in exchange for rewards. While liquidity mining can be highly profitable, the rewards are also taxable as investment income with a tax rate from 19 to 28% depending on the amount you have earned. When you receive liquidity mining rewards, they should be reported in your income tax return at their fair market value in euros on the day they were received. Swapping cryptocurrencies in exchange for LP tokens and vice versa is considered a sell and therefore subject to capital gains tax. It is important to note that you always must consider and assess individual case as the underlying protocols and activities are often very different. Navigating the tax implications for DeFi activities requires careful record keeping and compliance with tax regulations. By understanding the taxation of staking, lending and liquidity mining, you can optimize your DeFi strategy while staying compliant with Spanish tax law. How to file crypto taxes in Spain. Now that we have explored crypto taxation and DeFi activities in Spain, let's shift our focus to the practical aspects. How to file your crypto taxes and the important deadline to keep in mind. Filing your crypto taxes in Spain requires attention to detail and adherence to the regulatory framework. Here is how you navigate the process. Firstly, determine your tax obligation based on your crypto activities including buying, selling, staking and mining. Ensure you have accurate records of all your transactions and income. Next, complete Form 100 or Modelo 100 for your Spanish income tax declaration. This form will require you to report your cryptocurrency gains, losses and other relevant information. You can use various tax filing platforms or engage the services of a tax professional to assist you in preparing and filing your tax return accurately. Ensure all necessary forms and documentations are submitted before the deadline. Speaking of the deadline, it's crucial to mark your calendar for the tax deadline in Spain. The tax year in Spain runs from 1st of January to December 31st, so the calendar year, with income tax returns or the tax season starting in early April and are due by June 30th for the preceding calendar year. This means you will need to submit your tax return for the year 2023 by June 30th, 2024. Failing to meet the deadline may result in penalties or fines, and we don't want that. And here's another thing you need to know. Spanish exchanges are required to share customer information with the government, and new EU regulation means stricter oversight about all your crypto activity. So we just can recommend to stay compliant. In conclusion, navigating crypto taxes in Spain requires diligence and compliance. Keep records, stay informed, and don't hesitate to seek professional advice. Until next time, happy investing. If you liked this video about crypto taxes in Spain, please hit that like button and don't forget to subscribe to our channel. And if you have any further questions, don't hesitate to hit the comment sections. We are happy to answer any questions. Until then, see you in the next video.